Something happened in the silver market this week that caught almost everyone off guard. The price dropped, and it dropped fast, and most people have no idea why. But here's what's interesting. The reason behind this move tells us something much bigger about where silver is actually headed. So let's break it all down, right now, in plain simple terms that anyone can understand. Silver had been climbing steadily for weeks, building momentum, attracting new buyers, and looking like it was ready to break into a major new range. Retail investors were excited, social media was buzzing, and the narrative around silver as a safe haven was getting louder by the day. And then, suddenly, without much warning, the price pulled back. If you checked your portfolio and felt that drop in your stomach, you're not alone. But here's what separates experienced market watchers from everyone else. They don't just feel the move, they ask why it happened. And when you understand the why, everything else starts to make a lot more sense. So let's start with the big picture, because silver doesn't move in a vacuum. Silver is a dual asset, meaning it behaves like both a precious metal and an industrial commodity at the same time. That makes it different from gold, which moves almost purely on financial and monetary signals. Silver responds to what's happening in factories, in technology supply chains, in solar panel production, in electronics manufacturing, and at the same time, it responds to interest rates, the dollar, inflation expectations, and global financial stress. That dual nature is exactly what makes silver both exciting and unpredictable. And right now, both sides of that equation shifted at almost the same time, which is what caused the sudden drop we just saw. Let's talk about the financial side first, because that's where the biggest pressure came from. In recent days, there was a notable shift in how markets are reading the Federal Reserve. New economic data came out suggesting that the U.S. economy is holding up better than expected in certain areas. When the economy looks stronger, it changes the math on interest rate cuts. Traders started pricing in fewer rate reductions, or at least pushing back the timeline on when those cuts might actually arrive. And this matters enormously for silver. Here's why. Silver, like gold, pays no interest. It just sits there, holding value, or at least that's the idea. When interest rates are expected to stay higher for longer, the opportunity cost of holding silver goes up. In other words, investors look at silver and think, why am I holding this when I can earn real yield somewhere else? That thinking caused a wave of selling pressure, and when that pressure hit, it hit fast. But there's a second factor that made things worse, and this one is a little more technical, but stay with me because it's important. Silver had been in what traders call an overbought condition. That means, in the short term, too many buyers had pushed the price up too quickly relative to underlying demand. When you get an overbought market, all it takes is one piece of bad news, or even just a shift in sentiment, to trigger what's called a correction. Profit takers start selling, stop-loss orders get triggered, algorithmic trading systems kick in, and suddenly the price falls much faster than it went up. That's exactly what happened here. The Federal Reserve signal provided the spark, the overbought technical condition provided the fuel, and the result was a sharp, sudden pullback that surprised a lot of short-term traders. Now let's talk about the industrial side of the silver story, because this is where things actually get more interesting. Despite the price drop, the fundamental demand picture for silver hasn't changed. In fact, in some areas, it's actually getting stronger. Solar energy is one of the biggest stories in silver right now. Silver is a critical component in photovoltaic cells, the technology that makes solar panels work, and global solar installation targets keep going up, not down. Countries around the world are building solar infrastructure at a pace that was almost unimaginable 5 years ago. China alone has been installing solar capacity at record levels. The United States is ramping up through various clean energy incentives. Europe is pushing hard to reduce dependence on imported energy. All of that solar expansion requires silver, and the supply of silver is not growing anywhere near fast enough to keep up with that demand curve. That's a slow-moving but very powerful force underneath the surface. Then there's artificial intelligence and electronics. Modern AI data centers require enormous amounts of specialized hardware, and that hardware relies on silver for conductivity. The more AI infrastructure that gets built, the more silver gets consumed. These aren't speculative stories. They're current, real, and measurable trends. So here's the paradox we're sitting with right now. The short-term financial signals pushed silver down, but the long-term structural demand signals are actually pointing higher. This kind of tension between short-term and long-term forces is exactly where the most interesting market opportunities tend to show up. Now let's talk about the dollar, because you cannot understand silver without understanding what the dollar is doing. When the dollar strengthens, silver typically falls, and when the dollar weakens, silver typically rises. This relationship exists because silver is priced in US dollars globally. A stronger dollar makes silver more expensive for buyers in other countries, which reduces demand, which puts downward pressure on price. In the days leading up to this drop, the dollar index picked up some strength. Part of that came from the same interest rate recalibration we talked about earlier. If rates are expected to stay higher in the US relative to other countries, international money tends to flow toward dollar-denominated assets, pushing the dollar up. That dollar strength added another layer of pressure on silver right when it was already vulnerable from the overbought technical setup. Three forces, all hitting at roughly the same time: interest rate expectations shifting, an overbought technical condition, and a stronger dollar. That's why the drop felt so sudden and so sharp. But now here's the question everyone actually wants to know the answer to. What happens next? Let's be honest about something first. No one can predict the future with certainty in any market, and anyone who tells you they can is either lying or selling something. What we can do is look at the evidence, weigh the probabilities, and think carefully about what different outcomes might look like. Here's what the evidence is telling us right now. The structural case for silver over the medium and long term remains very much intact. The supply deficit in the physical silver market is real. It's been documented and it's not going away. The silver miners are not rushing to open new mines because mine development takes years and costs billions, and that means new supply is slow to arrive even when prices rise. Meanwhile, industrial demand keeps growing from multiple directions simultaneously: solar, electronics, electric vehicles, medical technology, AI infrastructure. On the financial side, the Federal Reserve is still expected to cut rates at some point, even if the timeline has shifted. When rate cuts do eventually come, silver tends to benefit significantly because the opportunity cost of holding it decreases. If inflation remains stubborn, silver becomes even more attractive as a monetary metal that holds real value over time. Gold has been signaling something important as well. Gold has been remarkably strong lately, holding up well even in an environment that should be somewhat challenging for precious metals. Historically, when gold is strong and silver pulls back, the silver-to-gold ratio widens, and that ratio eventually tends to mean revert. In simple terms, silver gets cheap relative to gold, and then at some point the gap closes and silver makes a catch-up move. That ratio right now is worth watching closely. Here's another angle that doesn't get talked about enough. Institutional investors have been increasingly looking at silver as a component of a diversified portfolio that hedges against tail risks. Tail risks meaning extreme events, currency crises, geopolitical shocks, debt restructuring scenarios, things that most people hope never happen but that experienced money managers have to plan for. In a world where government debt levels across developed economies keep hitting new records, the appeal of holding real physical assets that no government can print more of becomes more understandable. Gold gets most of the attention in that conversation, but silver at current prices offers a potentially more leveraged way to play the same theme. Now let's bring this all back to where we are today. The drop we just saw was real, it was meaningful, and it caught a lot of people off guard. But drops like this in assets with strong underlying fundamentals often look very different in retrospect than they feel in the moment. 6 months ago, a pullback in silver would have felt like a crisis. Looking back at it today, it looks like an entry point that a lot of people wish they had taken. That doesn't mean every pullback is automatically a buying opportunity. Market timing is genuinely difficult, and the pain of a position going further against you is very real. But context matters enormously. If you believe the structural case for silver, if you think the solar revolution is real, if you think the AI infrastructure build-out is real, if you think the Federal Reserve will eventually ease policy, if you think global debt levels will continue to create long-term pressure on fiat currencies, then a short-term pullback driven by technical conditions and shifting rate expectations starts to look a lot less scary and a lot more interesting. The key, as always, is not to make decisions based on short-term price movements alone. The key is to understand why the price moved, assess whether the underlying thesis is still intact, and then decide with clear eyes and a calm mind what makes sense for your specific situation. Silver just gave the market a reminder that it can be volatile, that it can drop fast, and that short-term sentiment can be powerful. But it also gave long-term thinkers a moment to check their conviction and ask the most important question in investing. Has anything actually changed about why I believe in this asset? For silver right now, the honest answer for most serious analysts is no. The reasons to watch silver carefully, to understand it deeply, and to have a well-thought-out position in it, those reasons are still very much on the table. Stay patient, stay informed, stay focused on the bigger picture, and remember, in markets, the people who understand the why always have an advantage over the people who only react to the what. This is AG John Market. Keep watching, keep learning, and we'll see you in the next one.